Hey, deal makers, and welcome to the show where it's all about financial freedom with real estate. Let's do this. And let's bring on our co-host today, Garrett Lynch. What's going on?
What's going on, Michael?
Hey, I want to talk about inflation. Now, it's been around for a while, so we've been able to watch it for like 2.5 years, and ravage and do a bunch of stuff and impact the industry. So I want to kind of shine back a little bit here, and let's talk about investing strategies, right? So, how has inflation kind of impacted us? When we're buying multifamily investing, what's the impact been to us?
Well, it's generally positive for real estate if you're in it. Now, I would say that's only on the values where it can possibly be good for you. It's not great on the expense side, obviously. So you're the pros are you can see that you're in an asset class that is typically hedged against inflation. But the cons are that you're seeing increased insurance costs. You're seeing labor is obviously a big thing. Your payroll. You've got your real estate taxes. You got all the other costs, they go up. So I'd say, you know, in general, it's not a great thing right now. I think we had a good spurt where we were like, oh, inflation was super helpful, like right in the beginning of COVID. But then as they started to hike interest rates to offset that, we were in for a world of hurt after that. So generally don't love it.
Well, so that's a good point. We have to separate inflation from interest rates, and they don't always go hand in hand, but they can, especially when inflation was so high that the Fed needed to react and raise interest rates. And you're right. So inflation in general is good, all things being equal. If inflation had been a little higher, and interest rates would have stayed the same roughly, it would have been good because rents go up. And if you look at the net operating income, right, income typically is higher than expenses, right? So there's a gap. So the higher the income goes up and the expenses, let's say, go back the same, over time, the gap becomes wider. So if you were to plot inflation, if let's say income goes up by 3% and expenses go up by 3%, the NOI gap starts to widen, which means that as inflation goes on, the value of the building actually goes up. The reason that it hasn't happened over the last 2 years is because, well, the interest rates also went up, which kind of closed that NOI gap. But in general, the whole idea behind real estate in general, any kind of real asset, anything has real value, is that anything with inherent value retains its value. They say like an ounce of gold back in 1908, bought a really nice suit. Right today, an ounce of gold buys a really nice suit. It's worth about $2,200 right now, and so the value of gold has preserved its value, though in absolute dollars, it's much bigger than in 1908. So that's really what we say. It's an inflation hedge as well. What are some other impacts that you think of, Garrett, of inflation that has maybe affected
Well,
our investing?
I think inflation in general is bad. So I mean, obviously, like across the country, the world, it's not a good thing to have inflation because it causes all kinds of problems. So your dollar is just not worth as much.
Right.
You see crazy things happen in other countries like Venezuela where their dollar's worthless. So inflation is generally a bad thing. Now just depends what assets you're sitting in while the inflation is going on, so that you're not getting completely decimated by the situation, depending on how fast it's rising. Um, and so that's why we talk about real estate and champion real estate as one of those vehicles in general. And so if you're in real estate, if you're not, start to look at it as an asset class for sure to if anything, hedge yourself against the terrible inflation that exists and that is ongoing.
Yeah, if you are in real estate, actually, it's one of the ways to actually protect yourselves against inflation. If you're just in cash, then you're right. Inflation kind of erodes your dollar, and inflation then will ultimately drive the value of the dollar up of the value of this real estate. So real estate is a great way to protect yourself against inflation as well. So if you want to get started with real estate and you want to invest passively in real estate as an inflation hedge, but also as cash flow, appreciation, and tax benefits, then check us out. Our investment company is called Nighthawk Equity. Just go to nighthawkequity.com. And the best thing to do, you can download two things. You can download our complete guide to syndicate real estate syndications and learn about the asset class. But We'd also love to have a conversation with you if you're like, this sounds really interesting, but let me find out more. We'd love to have that conversation with you as well. And if you're interested in getting into it yourself, as in I'm going to find deals, raise capital, put this deal together, then we'd love to have a conversation with you around helping you do your first deal, helping you scale your real estate portfolio, maybe from rentals or flips that you've done into apartment buildings. And if that's you, then go to themichaelblunt.com/clarity. And it's a clarity session for 20 minutes. You have a chat with one of our advisors to see what's important to you and if apartment buildings are right for you as well. So check out themichaelblunt.com/clarity.